Hey everyone, welcome back to Corporate Decoder, the place where we spill the tea on corporate secrets, and today it looks like one executive is getting a sweet deal as he moves up the ladder. A deal that is a little more than just a handshake. We are diving into an amended filing from CF Industries Holdings Incorporated today. Now, usually these are just minor tweaks, but this one is all about a big promotion and a very important person's new compensation package. This isn't the first time we're seeing this report. It is an amendment, meaning they are adding or changing some information that was already filed. And what they are adding is key details about the executive compensation for Christopher D. Bone. So, CF Industries is a major player in agricultural fertilizers, a really essential business for feeding the world. They are a big deal. The original report was filed because on the 5th of September 2025, they announced a really significant leadership change. The main story here is that Christopher D. Bone, who is currently the Executive Vice President and Chief Operating Officer, will be taking over as the President and Chief Executive Officer. That is a massive jump. But here is the kicker. This new role doesn't start until the 4th of January 2026. So there is a bit of a waiting period. This section is all about what happens when executives change roles, get hired, fired, or get their pay adjusted. And that is exactly what we have here. The Compensation and Management Development Committee, that is the group responsible for executive pay, met on the 16th of December 2025 to hash out Mr. Bone's new compensation. So starting in January 2026, this soon-to-be CEO will be earning a base salary of a cool $1.1 million. That's a significant increase from his current role. On top of that, his target bonus, the money he can earn based on how the company performs, will be a whopping 135% of his base salary. If he hits all the targets, that is a lot of extra cash on top of that $1.1 million. But wait, there is more. His long-term incentives, which are usually stocks or stock options designed to keep executives focused on the company's long-term success, are valued at $7.5 million for 2026. This big chunk of money will be given as stock awards. Most of it, 60%, will be what they call Performance Restricted Stock Units, or PRSUS. These are stocks you only get if the company hits specific performance goals. The remaining 40% will be regular restricted stock units, or RSUS, which usually vest over time. These awards will be given out under the company's existing stock plan, which is pretty standard. Now, this next part is really interesting and common for top executives. They are amending his change in control severance agreement. This is basically a contract that spells out what happens if the company gets bought or if he loses his job under certain circumstances, especially when there is a big change like a merger. They are beefing up the benefits he will receive if he is terminated under specific conditions. This is essentially a safety net, and a pretty plush one at that. So, if he gets let go under the conditions outlined in the agreement, he will get a lump sum payment. This payment is now 3 times his base salary and his target bonus. It used to be just 2 times. That is a 50% increase in that payout, which could be millions of dollars. He will also continue to receive benefits like health insurance coverage for 3 years after leaving. This is up from 2 years. It's like extended vacation pay for your benefits. And for his retirement plans like his pension, the company will continue to make contributions for 3 years after his termination, an increase from 2 years. This basically means they are going to fund his retirement for an extra year, even if he is no longer with the company. The filing makes it clear that this is just a summary, and the full details are in a more extensive agreement. And to see the full unedited text of this hefty severance package, you'd have to look at Exhibit 10.1, which is the actual amended agreement. This item is about the documents and exhibits that are part of the filing. So this is the actual document detailing the severance agreement, which has been updated several times over the years and now has an effective date of the 4th of January 2026, the same day he officially becomes CEO. And finally, the report is signed off by Michael P. McGrain, who holds a pretty senior position as Vice President, General Counsel, and Secretary. He is making sure all the legal ducks are in a row. Now, let's look at this from a shareholder's perspective. CF Industries is clearly preparing for a major leadership transition, and they are pulling out all the stops to make sure their incoming CEO feels secure and is incentivized to perform. The increased compensation package, especially the severance benefits, is quite generous. It suggests the board has a high degree of confidence in Mr. Bone and is willing to invest heavily to retain him and ensure a smooth succession. The increased severance going from 2 times salary and bonus to 3 times, and extending welfare and pension contributions from 2 to 3 years, is a significant bump. This is designed to make him feel very secure, even if unexpected events occur. It protects him, and it also signals to the market that the company is serious about retaining its top talent. However, from a cost perspective, these generous packages can add up. For shareholders, the question becomes whether this level of compensation is truly justified by the expected performance and long-term value creation. While retaining a strong leader is crucial, excessive executive pay can be a point of contention. Looking at the bigger picture, CF Industries operates in a vital sector, but it is also subject to market volatility, commodity prices, and regulatory changes. Investing heavily in leadership with robust compensation and severance provisions is a strategy to navigate these complexities. The strength of their business model and their ability to generate consistent profits will ultimately determine if these investments pay off. In conclusion, CF Industries is making a significant investment in its future leadership with a very well-compensated executive transition. The generous severance package highlights the board's commitment to Mr. Bone, but shareholders will be watching closely to see if this leadership change translates into sustained growth and profitability. The company appears to be prioritizing stability and performance at the highest level, which is a sound strategy provided the business continues to deliver. Alright, that is our breakdown of CF Industries Holdings Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think this executive compensation is fair? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives into corporate filings. Don't forget to check out the Discord community linked in the description below for more discussions. Thanks for watching. See you next time.